Xero axes jobs, shares surge. Myer shareholders off to the races. And Spotify morphs into TikTok. Welcome to Trading Up, a collaboration by The West Australian and Grapher. I'm Sarah Hughan. This episode is brought to you by Stake, Australia's most recommended broker. The tech sector was the best on the ASX today. Chief bean counter Xero led the gains. Why? Well, for doing what tech does best, replacing humans with computers. Xero slashed up to 800 humans from its workforce, which is about 15% of the people that work there. The company said the job cuts were part of its plan for disciplined growth. Yes, that sounds plausible. But Xero may also be taking its cues from tech stocks in the United States. Since October last year, big tech has cut almost 140,000 jobs. That's 140,000 energy drinking, t-shirt and sneaker wearing geniuses suddenly in the dole queue. Big tech were under pressure from analysts for being too fat, too big, and too bloated. And when they slimmed down, they started looking a lot more attractive to investors. So far this year, big tech has had some big share price gains. Australia's Atlassian, for example, cut about 500 jobs, or about 5% of its workforce, and it was rewarded with a 40% jump in its share price. Meta, which is the parent of Facebook, has seen shares jump almost 50% after laying off about 11,000 workers, or about 13% of its workforce.
Woo! Yeah!
It's payday for Myer shareholders. Myer shareholders are going to be off to the races, with the retailer rewarding patient investors with a 4-cent interim dividend and a 4-cent special dividend. Shareholders also got a double whammy, with Myer's share price jumping more than 17%. The share price got above $1 for the first time in 5 years. It was Myer's biggest profit in more than a decade. Bricks and mortar stores are back. COVID? What COVID? I want to go shopping. After all the lockdowns, people obviously just want a bit of retail therapy. I'm actually going shopping right after filming this video. Everyone loves to double their money. In our 100 Club segment, we look at stocks that have doubled in value since the beginning of the year. Usually they're micro-cap stocks that double in value, and then they crash and burn, and sometimes all of this happens in the space of a single day. Today, one of those micro stocks was Sarah Gold. Its share price doubled today after announcing positive drilling results from its gold project in North Sumatra, Indonesia. The top shares traded on the Stake platform today have a resources flavour as well. Lithium miner Pilbara Minerals and Core Lithium were amongst the most traded stocks. And perhaps not surprisingly, given Xero's price rise today to a 6-month high, Xero is one of the most traded stocks on the Stake platform. And the world's most powerful DJ, Spotify, starts morphing into Chinese scroll fest, TikTok. Like all good DJs, it wants to mean more to people than just music. And of course, it's conscious that video killed the radio star. Spotify unveiled its new look endless scroll feed that shows video, vodcasts, snippets of songs, and even audiobooks. The move is likely about one thing: users. Spotify has 489 million users. About half of these actually pay for the privilege. But TikTok has over 1 billion users, and it's expected to double that by the end of the year. It begs the question though, who's going to reign supreme as the one entertainment app to rule them all? You can find more business news content on thewest.com.au. Or to see all the data and insights behind this video, check out grapher.com. Thanks for joining me on this special episode of Trading Up. I'm Sarah Hughan. See you next time.